this conversation forward with Vivek Sharma, Executive Chairman at Suven Pharmaceuticals. Vivek, good morning and welcome to the show. This is Hiral on this side. My first question coming to you is, I mean, an interesting space that you are in, specifically the timing with regards to where CDMO as a business goes. Now, when we look at what you have given as your vision, a $1 billion number by FY30, what is it that is going to drive this kind of growth to reach $1 billion?
Yeah, good morning and thanks for having me on the show again. So I think few things, let's understand the macro environment. If you look at large pharma companies or biotech, they're all looking for partners like us to accelerate their drug delivery as well as they improve their cost margins. They are all under tremendous pressure to bring drugs to the market sooner and cost effectively. The costs have gone up and then drug delivery has been delayed, right? So we as a CDMO provider comes in play. The overall outsourcing has been on an increasing trend. If you look at intermediates and APIs, the amount of outsourcing that gets done, that keeps increasing day by day, as well as R&D capabilities and other deliveries, other product deliveries that large pharma and biotech is looking at. So as a key partner to the supply chain, we believe that the CDMO industry will continue to grow over the next foreseeable future. Where do we come in play? And India has built a very nice network of regulatory compliance sites, including what we do at Suven, which are really essential for these large companies and biotechs to be successful. So given the capabilities we have, given the challenges we see that these companies faces and will continue to faces, and given our track record and what we have built as a capacity, we believe that we have a very high chance of succeeding organic growth into the different areas that we have built out for our growth, which are the three key areas which we talk about as CDMO, the API, ADC, and oligo. We have an API plus business and a specialty chemical business, and all three are growing. And we expect that growth will allow us to work with some combination of inorganic to reach that $1 billion target that we have taken for us.
Right. That's interesting, Vivek, to hear. So 53% of your revenues come in from the CDMO business, right? Now, when you talk about this segment itself, are you now seeing increased inquiries as well? And if so, I mean, the previous conversation, that is what our takeaway was. What is the kind of conversion rate that you're sitting on in terms of the inquiries?
So we are not only seeing increased inquiries, we are seeing increased interest in relationships. So I'll just give an example. We were just in New York last week for a very large pharma event called DCAT, where all the suppliers and all the partners and parties like us, they come and meet face to face. We're very happy that we had a very large number of meetings with customers. And this is the first time that we had an event like this after acquisition of Sapala and acquisition of NJ Bio. And I'm very happy to share that a lot of our meetings were focused on integrated selling. Means if we were meeting a API customer, they wanted to learn more about ADC and oligo capabilities and can they buy those things from us. When we met an ADC customer, a very large company, they wanted to understand our chemistry capabilities and our oligo capabilities because they had a need to buy that as well. We met a very large oligo customer and they, again, same thing. They wanted to understand our broader needs so they can buy things from us. So that was a very positive feedback from us. The deepening of relationship, we met customers who have been working with the company for 26, 28 years. There were customers who were 20 years. There were customers who work all their projects with us for years and years. And there are customers who are just starting us and they've given us their significant portion of their supply chain.
Right. So Vivek, with all of this said and done now, how much is the kind of growth that you're expecting in terms of where the CDMO business goes? And where do you plan to take it from here on in terms of the contribution?
So listen, I think we have given a broad guideline of $1 billion. That's what we are sticking to.
But that's the overall business, right?
That's the overall business. But CDMO is the key driver for growth and the value creator. It'll play a significant part in the growth. That's how we see it. We have not broken down the numbers for the analysts by business. And we expect that, organically plus with some help from inorganic, that we will be able to achieve that overall $1 billion target.
Now, when you talk about specialty chemicals as well, is that will that continue to remain a low-key segment because it's just around 7 to 8% in terms of contribution? So how are you seeing specialty chemicals as a business grow from here on?
No, we have high hopes from that business. It is not a low-key segment. We have invested in talent. We have invested in capacity. We have invested in a relationship. I myself was in Europe with very large customer recently, and we have very high hopes with the potential that the business has. And we are really excited with the wins that we are seeing in our favor. Our credibility with the kind of commitments that we have been able to deliver, with the value that we are able to deliver to the customer want us to invest more and then continue to grow with them. So we are excited with the potential we
But
see.
Vivek, the reason I ask you this is because 53% is CDMO, API is around 40, 7% is your specialty chemicals currently. Now, in terms of your analyst meet, you've categorically mentioned that you want CDMO to contribute almost 80% of the sales by 2030. So if CDMO is going to become 80%, how are you going to focus the remainder 20% between specialty and API? How does that change? And then in turn, how does your margin picture change?
Yeah, so I think a few things. Listen, Spec Chem is a very important piece of the business. We serve very large customers. We are partners with very large customers, and it's a very small base compared to the CDMO business, and it's going to grow. Secondly, keep in mind what we do for Spec Chem is also part of CDMO. It is the CDMO piece that we do for Spec Chem. It is not. We do not have a product of our own. We work with our partners to really build what they need. So that is also part of the CDMO growth.
Okay. And with acquisitions like Cohance and NJ Bio, how does that impact your margins overall?
Now, we are committed to maintain very high margins. So while we see some short-term challenges with some of these businesses, but we are looking at cost efficiencies, pricing, to really make sure that we continue to deliver the margin expectations that we have been set for the investors, as well as in mid-30s. And as you know, the different businesses are at different sites. So sometimes we see challenges in one business for a short time. But we are overall excited that we think we have a path to really achieve and keep delivering the mid-30s margin that we have been delivering and committing to our investors.
So when do you think you will be going back to above 40% kind of margins, which you did achieve in financial year 22, or even for that matter, FY23, because those 2 years were really strong. 43, 44% was the kind of margin profile you had. Your profitability was in that range of 400 to 450 odd crores. Do you see that happening in FY25, 26 anytime soon?
Our focus is to maintain what we have, mid-30s, and then keep growing the business as fast as we can. Those were unusual years, not just for us, but for everybody else in the industry. And we are fortunate to really take advantage of that situation for our investors as well as customers. But we are continuing to improve margins and then targeting mid-30s margin consistently. And if there's an opportunity, we'll try to do better.
So as you grow from here on, and you're saying you're going to accelerate from here on to reach that vision 2030, right? What is that number that you're aiming for in terms of 26?
Accelerated growth is the target that we have given. We've not given a specific number. So we will continue to maintain a growth rate that we have been delivering at to achieve the $1 billion target for the 2030. So you will see an accelerated growth in revenue as well as EBITDA for 26.
Okay. And any more acquisitions that could be in the pipeline? Because you have made a couple of them, at least in the last 3 to 4 years. So if so, what segments would they be into?
Yeah, we've done 2 in the last 6 months. We acquired Sapala and oligonucleotide in Hyderabad, and we acquired NJ Bio in Princeton. And we're very excited with those acquisitions because they not only bring a very unique capability, but they bring a world-class team to us as well as customers, right? So we're very excited. What are we looking at? So yes, there will be more acquisitions, and they're opportunistic as we look at as to what is available. But we are looking things in peptides, we're looking things in flow chemistry, some unique capabilities that allows us to differentiate ourselves and then capture that market.
Okay, and will they all be funded through internal accruals, or what's the plan?
No, it's all internal accruals. We have a very strong balance sheet, and we're optimistic that we'll be able to fund through internal accruals.
Okay, and any capacity expansion plans on the cards in the near future?
So we expanded the API capacity in the last few years. We are working on ADC capability expansion and adding conjugation suites in NJ Bio in Princeton. That was part of the acquisition. And for oligo, we are expanding and building a GLP site in Hyderabad that will be completed by next quarter. So there are plans in each of the business to really look at capacity and expand that.
Right. So I think expansion is something that is going to be key, but the vision and the route that you take to reach your vision 2030 is something that the street and the investors will be watching out for as well. Thank you, Vivek.